Hi everyone, Michael from Bullion Now, bullionnow.com.au. It's early morning here in Melbourne. Shop's not open yet, so I just thought I'd take the opportunity to film what Joe affectionately calls one of my mini-rants, what I like to believe is an observation of the industry. So one of the themes that we're seeing come through at the moment is how will gold react once the recession's here? Will the price of gold decrease as it did last time back in 2008, 2009? World recession, when the Fed Reserve and the European central banks increased the liquidity in the market, and the recession finally started to really start to bite, particularly overseas. We actually saw the decreasing of the price of gold, and the mainstream media at the time decried the death of gold as a store of wealth because of that decrease. Now, my argument at the time, and my argument still, is there are two reasons that we buy gold. One is for the capital appreciation. We all like to buy low and sell high. And as Joe's excellent technical analysis videos show out with their popularity when he releases them on a Thursday. But the other main reason that we do buy gold and silver, particularly, is for that store of purchasing power in times of trouble. That ability to be able to convert something very quickly and easily into things that we need at the time during a crisis. And gold and silver fit that bill. So when you think about it logically, people buy gold now in good times. So the times have been very good, and they're still good, if we're honest, at the moment. Although, as everyone points out, and mainstream media is pointing out, there are serious troubles coming down the pipeline. We're seeing it now, the first initial signs of it starting to come through on the horizon. So when times are good, like we see now, we see increasing in purchasing of gold as people store it away, increasing demand, increasing price. And particularly these last few weeks and months, we've seen that both the demand and the price has been increasing quite a bit. But once the recession's here, once we're fully immersed in the recession, people start to liquidate their gold stocks because they can't liquidate their real estate. They don't want to liquidate their shares because the price of shares have gone down so much. So they start to liquidate their gold stocks. Now, obviously, that increase in selling, if it's not matched by an increase in buying, it's going to start to drive that price down. So it's actually doing exactly what we expect it to do and what we'd want it to do. We'd want it to start decreasing then, because it shows that the economy is starting to retract. It shows that we're all starting to take seriously the tightening of our belts and things like that. It shows that people are needing the cash and they're needing those things. So they're actually using the gold for the very reason that they bought it for. So it's a good and it's a healthy sign, and it's what we want to see. Are we there yet? We are definitely not there yet. We are definitely at the early stages. We are seeing, as I said earlier, that massive increase in demand and that increase in price starting to really come through. Am I saying that a recession is about to start tomorrow? No, I'm not. What I am saying is that we're seeing the early stages of people hoarding it and the price going up. Does that mean you need to rush in and sell everything and buy gold straight away or silver? No, that's not what I'm saying. But what I am saying is that it is a good and healthy part of any investment plan that you have. You need to allocate a certain amount of your investments to products that are going to run counter to the main investments. So your main investments are probably, for most people, real estate and shares. So you need something that's not going to react when they go down, or even better still, go up slightly. And gold and silver, but gold particularly, is the argument there. Hi everyone, sorry about the break in the filming there. There was a distraction in the office and it's taken me a little while to come back and finish this one off. So I'd just like to say thanks for taking the time to watch this. Hopefully it's been beneficial for you, and it's made you think about the place of gold in your investment portfolio and how it fits and what you're going to do with it in the future. So if you want to discuss this any further, if you don't agree with what I say, if you want to ask questions, feel free to put them in down below here. I get back as frequently as I can to respond to any queries that are down here. If you're in Australia, you can call us on 1300 84 84 10 and discuss either this topic or the place of gold or silver generally. We're always happy to have that discussion. Or you can send us an email from anywhere in the world. So sales@bullionnow.com.au, and we get back to you as quickly as we can. We're also on Instagram and Twitter and Facebook. So you can contact us through those forums as well. So again, thanks for watching, and we will see you next time.